As I said, 165,000 tonnes, about 5.3 billion ounces. Now, if you put that in a block, it's 20 metres per side. So to try and visualise that, if you can visualise the Eiffel Tower, that block would slide underneath the Eiffel Tower without touching it. And that's the entire world reserves of gold. Doesn't sound that much, but actually that's quite a lot of gold as things go. And the biggest one is obviously the US, who claim to have 8,133 tonnes, which is 72% of their foreign reserves, as quoted by the IMF. And that's in Fort Knox, built in 1937 and audited once in its life by the owners of Fort Knox. No one else was allowed in, and they decided how they audited it and what rules they audited it under. And no one has been allowed in since to see it, and it was done in 1953. So, yes, it might be there, but yes, you could also go on the internet tomorrow and find out that they shipped several tonnes of gold across to China just a couple of years ago, and China returned it because it wasn't gold. It was titanium plated. And that is in the news, so you can find that out, and that was shipped from Fort Knox. So I haven't got a quote of that article, but you can look that up on the net yourself. So if we go to the top 5 countries with the highest percentage of foreign reserves in gold, now some of you might be looking at those countries and saying, well, hang on, they've got the most gold to their money. But hang on, haven't the IMF and all the banks and all the media been telling you that Portugal, Greece, Italy, aren't they connected? Aren't they the pigs countries that we've been told are financially bankrupt? Isn't that what's been in the news for the last year? Well, hang on, they're 3 of the top 5 in the world. Top 100 countries, I've only got top 100 countries, but they represent the highest 5, and there's 3 of them in there. And as I've said, number 3, the US, well, your guess is as good as mine how much they've got and whether it's theirs or not. We rate at number 20 at a measly 15.6. Somewhere around Cameroon, we've got a kind of a similar level of gold, so to reserves. Not exactly the greatest, I'd say, for apparently one of the superpowers of the world. So if we go on to gold facts, right, let's touch on paper gold, ETFs. There's apparently 24 times more ETFs traded than there is physical gold. Now, I'll come straight on to the second point of gold loaning, which has been touched upon today. At the end of the day, if you say you've got gold, you're allowed to then use the same that the banks use, fractional reserve banking, basically. You can sell that gold and loan it out, but you don't loan out the amount you've got. You can loan out the amount you've got to that guy, and that guy, and that guy, and that guy. So it just keeps multiplying. So what happens when everyone tries to cash it in? Because they all own the same bar. Well, they can't, can they? So there's more paper out there in gold than there is physical gold in the world, in existence. And let's face it, half of that, is in jewellery, buried at the bottom of the sea. God knows where half of it is. Half of it's probably melted away and sitting in streams. But there's still actually that many ETFs out there that even the amount of physical gold in the world was put into a block, we still couldn't cover all those liabilities. So where Marcus touched upon anything which isn't physical allocated gold. Now, a lot of physical gold's been bandied around today. Physical allocated is different. Allocated is quite an obvious word. It means you've got it. It doesn't necessarily mean you've got it in your pocket or at your house. It can be in a private vault, but it means you own it. You don't own a lease. You don't own a piece of paper. You own that gold, and never put it in a bank, ever. Because as I said earlier, guess what? When they run into trouble, they change the rules and they take your gold back and give you whatever they say the current value is, which is exactly what they did in 1933. So don't do that. Okay, and we'll move on. As exactly the same quote as Mark said, 0.3% of the UK market is invested in gold. Now, the reason I put that up there is about bubbles. Now, what does everyone know about a bubble? It's something that everyone's in. So are 0.3% of people everybody? Not by a long shot. So have we got quite a way to go before it possibly bursts? Yes. Do I think it'll ever burst? No, because of its relationship to money. I mean, I hope you're coming to learn a bit about that today. I know I'm going through a lot, so fire questions if I'm going too fast. Now, that's average return over the last 10 years, 18.3%. If you put it in your bank and ask for that interest rate, I think you'd be in for a bit of a shock if you did. And that's only averaged over the last 10 years. As most of you know, it got 30% last year. So that's not bad going. And that is based on GBP, Great British Pounds, by the way. If you actually take it in other currencies, it will always equal a slightly different amount. US dollars, it happens to be 18.4. But that is literally based if you used pounds to buy gold over the last 10 years. So that is a very accurate one for you to see roughly what you're could make in gold. And I would suggest that as our curve seems to be going rather exponential, and last year it was 30%, I wouldn't suggest next year is going to be 18%. I would suggest it be a hell of a lot higher. And right now, this was something that was actually brought up in the Sound Money conference only last week. Now, when you've got all these commodities, you have copper's the easiest one because people think of metals, they're thinking of copper and gold, but say it was cotton, oil, tea, whatever. You think about how much there is right now, not how much there is in the ground that they can get at or that they think is there, but how much there is completely available and how much could that satisfy the demand for the world currently. Well, with current global demands for gold, the amount of gold we already have above ground will satisfy 80 years, but the next one down on that list, I've not chosen the bottom one, I've chosen the next one on the list, copper. If you took all the available copper in the world, it would last 3 months if they didn't mine any more. And that's second in the list. That's quite a large gap, which shows you how gold interacts in the market and why it doesn't act the same as other commodities, why it can be very different.
Silver?
I don't have the figures for silver, but I know that as we're down to 500 million ounces now, that theoretically we'd only have a few months. It would be a matter of months. But I know there's a lot of silver mines opening. I went to a conference only a month ago and had talks from 100 people talking about their mine and why I should invest in it. And at the end of the day, if silver is going up that much, then so are their profits. So as long as the management's pretty good, I would suggest that would be a pretty good bet too. Right, so just a summary. That's the end of part one. So you know I'm roughly about a third of the way through. So you're not falling asleep hopefully now. You can see that gold's had a long, long history in our lifetimes. You know, it's been through Greek, Egyptian, even in the Bible, and then you've got Californian gold rush. It is through our entire history. It's not just a local and phenomenon, which is how people look at it when they see a chart. They're looking at 1 or 3 years. No, it's a very long time. Okay, you need to focus on the present, but you need to understand its history to really understand why it's doing what it's doing and what it's going to do in the future. Silver and gold intricately related to money. In fact, they are mostly the word for money in most languages. And it retains its value over time, as I've shown you. And gold versus printed fiat money, to give it its full title, shows that you can get stupidly high values, which I'm not suggesting it's going to go to. I'm just saying if you try and do a gold standard now, which they are actually talking about in many, many countries, and using silver as a basis as well, or a basket of commodities to include these, well, you've seen the figures that gold would need to achieve for them to be able to do that. So I don't know how they're going to work that. You know, they're going to have to pull the biggest fiddle on earth to try and get that, or else make a lot of people with physical gold really, really rich, which I'd be happy with, and I know Marcus would too. So, and the gold reserves, as we said from the IMF, we don't really know what's out there. We know what we've been told. But at the end of the day, there's a few questions that have been asked by GATA. Most of you might know the Gold Antitrust Association. And they're heavily involved with the JP Morgan and HSBC gold fraud scandals. And actually, they managed to get a court ruling yesterday. And they've actually managed to get the Fed to produce one of the 17 documents they asked for to be released to the public. Hopefully, they can try and get that overturned and get a few more of the documents out there, because they are supposed to be out in the public forum for us all to read, so we really know what's going on behind the scenes. So hopefully you've got a bit more of an understanding of the history of gold now, where it's coming from. I know I've touched upon some of the same subjects as Marcus, but maybe a slightly different background to it. So if we go into part 2, which is our economy. Historical economy we'll start with. Don't worry, we'll get through this section pretty quick. So depression, we're in one. Apparently it started in 2007, so we're only 3.5, 4 years in now. But actually the National Bureau of Economic Research records 47 depressions since 1790 or 1709. I might have written that wrong. I can't remember which one it is now. But at the end of the day, it's not the first, and it's not going to be the last. That's actually a US-based survey, so they're basing that on the US. But let's face it, depressions are worldwide. It's not like it's just the British government going under now. It's all governments worldwide and all economies. So the Great Depression, everyone knows the Great Depression, don't they? 1873. And you're thinking, no, hang on. That's not the Great Depression, is it? Everyone thought it was 1930s, didn't they? Okay, no, it's not. Read your history books. The Great Depression was 1873 to 1896. And then, when it happened again, a little bit later on, they had to rename it because they were calling the current one the Great Depression, so that is now called the Long Depression. And the new one is called the Great Depression, but it wasn't. And guess what? In about 2015, we might be looking back saying, oh, the Great Depression, 2007 to whatever. And we'll have to name that one long and just change the history books. That's what governments do, isn't it? You just change it round when it suits you. And as you can see, we've got 21 years and 12 years. Now, if you remember from what Mark's talked about, that was actually when we were in the recession, if I focus on the 1930s one, which everyone knows. We were actually in the Depression for 12 years, but it was actually another 4 years before we started to pull out of it. And there was a lot of problems in that time, and you didn't reach the levels outside that you had at the beginning for a lot longer than that. And on average, apparently, a depression lasts 14 years. So if ours started in 2007, be prepared to wait around for your stocks to go back up to their previous levels until 2021. If you want to hold your money in that, that's fine, but I might suggest that you could make some money in between and maybe secure it in a better way. So famous day in history, Tuesday the 29th of October, 744 US banks had failed. I didn't know there were that many US banks now, let alone back then, so that was quite a shock to me. And just in the 1930s